So what if the bigger risk in Singapore property in 2026 isn't prices falling, but getting stuck where you need flexibility the most? Well, have you noticed that nothing looks wrong in the market, yet committing feels heavier than it used to be? And are you holding property in Singapore and quietly wondering whether patience will still be rewarded the same way it was before? And have you felt that different parts of Singapore now feel emotionally different, even though the headlines treat them as one single market? Now, why would you stay to the end of this video instead of clicking and scrolling away? Well, let me give you 3 reasons. Number 1, because I'm not going to tell you where to buy or sell. I'm going to only explain why different zones in Singapore behave very differently in 2026. And second, because most people misunderstand liquidity, and that misunderstanding only shows up when it's already too late. And thirdly, because if you are making long-term decisions in 2026, you do know that timing and behavior matter more than forecast. All right? So what would you actually walk away with after you watch this video? You understand why Singapore is not one property market in 2026, even if we like pretending it is. And you will see how the Qimen and our annual chart explains which zones feel calm, which feels tense, and why. You also gain clarity on the real risk most investors never see until they're already living with them. Now, if this conversation like this help you think more clearly, subscribe to the channel if you haven't done so. Turn on the notification bell so that you don't miss the next one on my channel. And if you do know someone wrestling with similar questions, do share this video with them. And you know what? Sometimes clarity travels better than advice. Okay, are you ready for this? Are you ready for the discussion? So once again, let me reiterate the question. What if the biggest risk in Singapore property in 2026 isn't prices falling, but owning the wrong part of Singapore for that kind of emotional pressure in 2026 creates? And let me start with something uncomfortable. All right? And what if 2 people both say I own a property, but in 2026, they live in completely different emotional realities? One feels steady, the other feels constantly alert, second guessing every move. You see 2 people living in the same country, feeling different pressure in the same year. So this is what we are going to look at. But before we go further, allow me to be absolutely clear. Well, I'm not a registered property agent in Singapore. I'm not able and allowed to give you any form of investment advice. All I'm sharing with you is Qimen analysis. I'm not going to tell you where to buy, sell, or avoid. I can't do that. I'm not making price calls for or predictions. I wish I could, but I cannot. So all I'm discussing is just purely a timing and behavioral conversation using something called Qimen annual chart for 2026 to explain why different parts of Singapore feel differently in 2026. If you stay, don't listen for instructions. Listen for the recognition. Okay? So, here's something very interesting. Have you noticed that nothing's look broken in Singapore property market yet? Committing feels heavier than before. You see on paper, things still function quite well. While transactions happen every day, prices haven't yet collapsed, although some people start thinking you will. Stability remains. And yet, decisions feel slower. And that heaviness isn't fear. We always call this the friction. You see, if you think 2026 is going to be a crash year, how about this? I'll call it a sorting year. What is sorting year? Sorting year is a year that doesn't shout. It quietly exposes when pressure lifts. Now, another question you may ask, why use Qimen instead of relying only on data and reports? And I get that. There's so many property agents, economists, commentators, give you tons of numbers, reports here and there, every single day. If you scroll through the YouTube, Facebook, TikTok, you see a bunch of data. Okay, so yes, these reports tells you what is happening right now. Qimen, on the other hand, explains how people feel and behave while it's happening. And you know what? Qimen is not mystical. It's not a woo-woo stuff, not religion, not fortune telling. Think of it as a decision weather map, okay? So Qimen actually shows where movement flows, where it slows, where fear shows up, where people hesitate or overreact. Now, the chart itself is divided into 8 palaces. Each palace represents a behavioral environment for a particular year. Each palace has door, star, deity, and stem, which describe how money and emotion behave in that environment. So you see, it's one single chart, 8 palaces in the same year. But because of each palace differences, there are different experiences. Okay, so just once again, this is not investment advice. It's purely my perspective of using Qimen annual chart to interpret the Singapore property market. Okay, so now how exactly are Qimen palaces mapped to Singapore in 2026? Now, I know some of you are not Qimen practitioners, and if you are Qimen practitioners, understand one thing. The way I map it and the way you map it can be different. And according to my teacher, this is perfectly fine. I'm just giving you my basis. You can disagree with me, which is therefore your job to tell other people how you map it. Okay, so I'm not here saying that my way is the only way. Okay, so now first of all, we are not mapping geography literally. So we are mapping behavioral zones. So for this video, my mapping is like this. I'm going to give you 5 palaces for 5 different areas. I'm going to use the Southeast Palace for the prime, the CCR, and the core capital zones. Don't worry, I will break it down piece by piece later on. I'm just giving you an overall summary here. So Southeast Palace is for the prime, CCR, and core capital zones. Now the South Palace is for the redevelopment, narrative-heavy, and high attention zones. The East Palace is for city fringe, RCR transition, and upgrader-heavy zones. Then we have got the Northeast Palace, which is the mature heartland, established residential zones. And finally, North Palace, which is peripheral, future growth, and long horizon zones. So every time I mention a palace, I'm going to name the type of Singapore area it represents. You do notice that the terms I'm using are a little bit different from the industry jargon, and the reason is that, once again, I'm not a property agent, so I'm using my way to interpret the property market using Qimen analysis. Okay, so let's continue. So let's talk about Southeast Palace. So when I say Southeast Palace, I'm talking about the prime districts, CCR locations, core capital preservation zones. Now in 2026, the Southeast Palace contains the following. There's the open door, night heaven, heavenly grass, the neck constellation, earth with thing fire. And I know some of you are not Qimen practitioners, you have no idea what I'm talking about. So allow me to speak in layman language now. So all it says is liquidity exists. Movement is possible. Now we have the neck constellation, which narrows the passage. So we call this not a block zone, but a future zones. You see, prime buyers in Southeast Palace are selective. Sellers cannot rush. Every transaction must justify itself. And that's why prime Singapore in 2026 feels calm but demanding. If you are patient and prepared, it works beautifully. And if you are super prestige guarantees easy exits, frustration quietly appears. Now again, this is not danger, it's just discipline. So once again, I just remind everyone, I'm not giving you any form of investment advice. I'm just creating awareness for you. Now, let's move on to the South Palace. So why does the South Palace match redevelopment and narrative-heavy zones? So when I say South Palace, what I'm talking about is redevelopment clusters, areas driven by stories, future plans, and attention. That is the term I'm using. Now, the South Palace contains the following. You've got the Nine Earth, Heavenly Ambassador, Rest Store, Gunmetal, and the Earth Estates. Now, this palace actually absorbs capital easily. Entry feels smooth. Stories feel convincing. Yield narratives feel comforting. But we have got a rest store, and it matters. Now, first of all, clarify this for you guys. Rest doesn't mean safe. It just means slow. So that means money can go in easily, but come out later. This is where people confuse attention with liquidity. So if you can wait without emotional agitation, then this zone works. And if you need speed, it becomes draining. The South Palace doesn't punish belief, it punishes impatience. Now let's move on to the East Palace. And the question is, why does the East Palace feel psychologically heavier than other zones in 2026? Okay, so now let's look at East Palace. And I'm talking about the following: city fringe areas, RCR transition zones, and upgrader heavy neighborhoods. Okay, so East Palace in 2026 contains the following. We have the Chief there, Heavenly Heart, Theodore, Runwater, and Banefire with Danger Constellation. Now, this combination combine how I really is emotionally significant. Now, Theodore, for one thing, it doesn't mean danger is real. It just means fear is perceived. Then we have the Heavenly Heart, which governs decision-making and internal dialogue. So what exactly happens here then? So people think more, they hesitate more, they second-guess more. Small signals feel big, and neutral news feel threatening. Then rainwater and big fire creates internal conflict. Logic and emotion pull in opposite direction. And this is not a collapse zone. And we call this a psychologic stress zone. Now, liquidity doesn't vanish, but confidence wobbles. People delay decisions or rush them emotionally. And this is where overreaction risk is highest. And if buffers are strong, you are fine. But if your buffers are thin, anxiety drives behavior. And the danger here is not the market. It's actually a decision making under fear. So now let's move on to the Northeast Palace, which reflects the mature heartland areas. Okay? So when I say Northeast Palace, all I'm referring to are established heartland estates and mature residential zones. This palace contains surging slick, heavenly pillar, death door, strong metal steps, carriage constellation. Now we've got death door here. Death door doesn't mean loss. It means completion and holding. So people here do not rush. They do not speculate. They hold because life is rooted there. Movement happens when life requires it, not when opportunity calls. If you suddenly need speed, then this zone feels restrictive. And if you are comfortable holding it, then it feels grounding. Again, there's no good or bad for Qimen analysis. All I say is just fit. Then we have got the North Palace, which describes future growth and peripheral zones. And North Palace here talks about peripheral areas, future growth corridors, and long horizon zones. And the North Palace contains the following: the moon, heavenly grain, scenery door, e-wood, and wood earth stamps. So what it means in layman is that progress here is subtle. The timeline stretch, the validation is delayed. And this zone rewards patience and tolerance for ambiguity. It frustrates those who need certainty quickly. And the mistake isn't choosing potential, it's expecting timing to obey hope. So now we have gone through the 5 palaces. Let's go back to this question, the overall theme for Singapore in 2026. Okay, I'm going to give you 5 themes to wrap up this video. Now, theme number 1, Singapore is not a one market state, even if we pretending it is. Let me say it one more time, because this is what most people, I think, get stuck. Singapore, yes, it's a small country. It feels organized. It feels like one system. So it's very tempting to assume property behaves uniformly across the island. I know some of you don't think that, okay, because you are more sophisticated investors, but majority of the people don't know what you know. So in 2026, this assumption quietly breaks down. You see, different zones respond very differently to the same pressure, not because the policy changed, because I don't believe that. Not because something is wrong, I don't believe that. But because human behavior changes depending on the context. So if you have wondered why two friends holding property in Singapore feel completely different about the future, which this is usually the reason. And just to be clear, once again, I'm not saying one zone is good and another is bad. This is not advice, I'm just creating awareness. So if you are open to seeing Singapore as a collection of behavioral environments rather than a single market, then things start to make more sense to you. If not, then there could be frustration that will follow. Theme number 2, liquidity exists, but it doesn't behave the same everywhere. Now, this is one of the most misunderstood ideas. People hear liquid market and assume I can exit anytime. That assumption worked better in faster cycles. But you see in 2026, liquidity is still there, yes, but it behaves differently depending on where you are. So some zones filter you. They ask you to qualify. Some zones stretch time. They don't say no, they say wait. Some zones react early. They feel pressure before others even notice it. This is not warning, just a reminder. So if you plan with the idea that liquidity is identical everywhere, then you are not being reckless. You are just using an outdated mental model. And again, this is not a recommendation to move or act. It's just an invitation to think more precisely. So theme number 3, pressure shows up first where people stretch the most. And this part can feel uncomfortable, I must say, so I will say very calmly. Stress in 2026 doesn't show up where assets are bad. It shows up where people stretch. Stretch board, budgets, timelines, expectations. When buffers are thin, even small changes still pay. That's why some zones feel tense earlier than others. Not because they are wrong, just that they are sensitive. If you ever felt surprised by how emotionally heavy a small issue became, then these themes explain why. It's not a judgment, by the way, it's a pattern. And noticing pattern early is not pessimism, it's what I call maturity. Theme number 4, holding power matters more than optimism. So optimism is easy at entry, but holding is where reality shows up. In 2026, the people who feel most at ease are the most excited, and not the most excited one. They are the ones who know why they are holding, how long can they hold, and what they will do if timing shifts. So this year quietly rewards people who have internal clarity, not external validation. And you've been asking yourself, can I actually sit with this decision if it takes longer than expected? That question matters more than any forecast. And again, I'm not telling you what to do. I'm just encouraging you to ask better questions of yourself. So the final theme is 2026. Once again, it's not a crashing year. It's what I would call a sorting year. And this is important, so not rush past it. A sorting year doesn't announce itself with drama. There are no sirens, no headlines screaming disaster. Things simply separate. Comfort from tension, patience from impatience, preparedness from hope. So if you have felt some people seem strangely calm while others feel increasingly uneasy, well, that's the reason. The market is not breaking up; it's just reviewing, and revelation feels uncomfortable if you are not expecting it. So what are the risks you should actually be aware of? Well, let me talk about something that hopefully will not be scary. It's not price risk, it's not policy risk, but really human risk. Again, it's not advice, it's just my perspective. So risk number 1 is called liquidity illusion. The most common unspoken assumption is this: I'll be able to move when I want. And that assumption usually holds until it doesn't. In 2026, liquidity doesn't vanish. It becomes conditional. So when many people want flexibility at the same time, some will get it quickly, others wait longer than planned. And if you have never thought deeply about how long you can wait without becoming stressed, that's not a failure, it's just a blind spot. Seeing it now is a gift to you. Number two, risk number two is overconfidence in stability. And when nothing looks wrong, people stop checking assumptions. In 2026, the market doesn't punish complacency loudly. It simply stops cooperating smoothly. You don't get blown, you get slowed. And that slowing can feel confusing if you were not expecting it. So that isn't warning to panic. It's just a reminder to stay mentally engaged. Risk number three, emotional overstretching. Stretching doesn't always show up in numbers. Sometimes it shows up as constant thinking. So rerunning scenarios quiets irritation. When emotional buffers are thin, even neutral events feel heavy. This is where people make decisions they later wish they hadn't, not because they chose wrong initially, but because pressure makes patience disappear. Being aware of this risk doesn't make you weak. Actually, it makes you human. Risk number four, forcing decisions to relieve discomfort. This one, I would say, is subtle. Sometimes people don't move because it is right. They move because they want the discomfort to stop. So in 2026, forced decisions cost more than slow ones. If you ever felt the urge to just do something to feel better, pause here. The urge is information. You don't have to act on it. All you do is to recognize that. Okay? So risk number five is temperament mismatch. And the most overlooked risk is choosing a zone that doesn't match who you are. Some people need momentum. Some need calm. Some need certainty. Some are comfortable with ambiguity. And there's no one-size-fits-all approach. There's no right temperament. Okay? But here's the problem. Many struggles don't come from wrong choices. They come from choices that don't align with patience, personality, and life stage. So noticing that now can save years of unnecessary stress. So let me leave you with this. So the entire conversation you see is not a recommendation, is not investment advice, it's just a lens, a way to see 2026 more clearly. It's the same Singapore, same year, different experiences. And if this helps you slow down and ask better questions, I think I've done a great job in this video. I do know that this is not easy to digest. It's not something that you can understand in one go. I don't think so. So basically, if you have questions, if you want to have a deeper conversation, come join my Destiny Architect Telegram chat, and I will share more of this quiet, time-based conversation inside, and you can even take deeper conversations right there. And if that space feels right for you, come join us there. If not, well, take what serves you in this video, leave the rest, okay, and move forward with clarity. Happy investing in the Singapore property market in 2026. May I wish you all the best and a fruitful investment and positive ROI for those who are investors, and happy family for those who are actually staying as an owner-occupied property. See you in my next video.